All right, I've got 804. Welcome everybody to Wednesday Winners. My name is Lake Savage-Bellavance. I am the agent mentor for Aaron Gooderman, Nelson Alvarez, and I also have my base shop on here. So welcome. Wednesday Winners is all about intensive learning. And not that it's intensive, but it's more of a deeper look into what we do as agents here at the Lisa Group, a little bit more in-depth training. We have a lot of information coming at us all the time on all the other calls, and it's amazing. But I feel like some hyper focus is a really good thing to have sometimes. So tonight, we're going over mortgage payment protection. That is what we call MPP. It is a concept sale. So mortgage payment protection doesn't really exist in the way of insurance, except for One Americo product, which I know we have coming up, which is pretty similar to what we're talking about. But sometimes you're going to find that people don't qualify for the entire mortgage, right? Let's say you have a 70-year-old and they owe $200,000 on the mortgage. Let's say their mortgage amount, their payment is $1,200, $1,300. Well, it would probably cost them $1,200 to $1,300 to get that protected for 10 years maximum at age 70. And that's just one of them. So they'd be spending double their mortgage sometimes trying to protect that mortgage. And it doesn't make financial sense. You're never going to get anybody to agree to that. And honestly, if you're doing that, you're doing the wrong thing. I'll tell you what. But so mortgage payment protection is a way to dial the premium back and still give a really good level of protection to these older folks. Now, they don't have to be older. They could be younger with health issues. Okay. Sometimes you're going to run into people that have unavoidable health issues. Someone with a kidney transplant, someone with recent cancer. That's a big one. Someone with, a recent stent. Someone that has had any heart issues. So let's clarify on basically who qualifies for that. Anybody who's had cancer within the last 7 years is not eligible for most term. Anybody who's had a heart attack ever, any circulatory surgery ever. Hey, could you guys mute out while I'm talking for now? Any questions at the end? Gotcha. And gotcha. All right. Stay muted so I don't lose my train of thought. So where was it? Oh, anybody with a circulatory surgery at all, even if it's just like to check out your heart, they take that seriously. No circulatory surgeries, okay? Anybody who's had any sort of, organ transplant, they're never going to qualify for term. Any stem cell transfers, no term, right? So we've got to figure out what works for them. And what I love about the Lisa Group is that we have 15 different carriers. We have options for everybody. But as a new agent, you might be confused on what to give them. So this concept sale is mortgage payment protection. It uses a final expense whole life product, and the death benefit amount matches how many years of mortgage payments they would get if they passed away, their beneficiary. Okay. So let's say someone has $1,000 monthly payment on their mortgage. 1 year's worth of mortgage payments would be $12,000 in death benefit. Is that ringing a bell? So for every year, that would be 12 months, would be 12,000 death benefit. 24 months of mortgage payments would be 24,000 in death benefit. Okay, why do we do that? Because final expense is more lenient on those things, right? They allow for shorter timeframes for you to be out from a certain illness, like a recent heart attack within the last 3 years. You can get preferred on a lot of our products. Any circulatory surgery, AFib, right? Cancer within 2 years on some of our products. I'll answer that at the end. Could you remind me that, JP? That'd be awesome. So they're a lot more lenient, so we can get people coverage. Now, we're not going to get them hundreds of thousands of dollars, but we're going to explain to them, hey, it's better to have something than nothing, right? So you're going to use it in those situations. Now, some people might be older, but healthy, right? It still doesn't make sense financially, because getting a term product when they have a 30-year mortgage, you can only get them 10 years of coverage. Well, what happens if they live until they're 81 and you get them coverage at 70 for 10 years, right? They're going to be right in the same exact spot as they were 10 years ago. And now they can't get pretty much anything, right? At 81, they can only get final expense. So when it comes to mortgage payment protection, you're going to explain it like this. You want to develop a why and kind of educate them in the very beginning and manage their expectations. That is very careful, because these people think that they can just come on, get a quote for what they're, to protect their entire mortgage. And they're going to be sorely disappointed if you don't say anything to educate them. They're just going to shut you down once they start to see 12,000 for $100. Are you kidding me? Like, I don't need that, right? It's because you haven't educated them. So real surefire way to do this in the beginning is tell them on what exactly you can do for them. And I learned this from a call with Nick Horner and Josh Harris. It's a surefire way to get people to understand easily and quickly. If you can't get people to understand it quickly enough, they will be confused, and a confused mind says no. So you have to be concise and clear. And if this is a confusing concept to a new agent, it's definitely going to be conveyed as confusing to the new client. But I want you guys to think, don't think with your wallet or what you would do. It is all about protecting the client and what they have. This is their last chance, most likely, to get an amount of coverage that's still going to make a difference in their family's lives. We have to make them see it that way. So when I start a mortgage payment protection, I'll go through the general hoops of, talking about rapport, who met who first, who said I love you first. Jared taught me that. It's a great way to bring out the emotion. And then you start talking things about the house. Like, do you have anything that would act like life insurance to help take care of the house, right? It's kind of like you're just asking the beginning parts of safe money questions, right? For annuities. But you're asking them, hey, is this house a brand new mortgage or is it refinance? You'll find that most of these older folks are only refinancing their house. They've already been in the house. I would say a very large chunk of these older folks have equity, right? They're just looking to lower their monthly payment to change their standard of living, right? So you're going to find equity in there. Ask them how much equity they have. Hey, congratulations on the refinance. How much did they appraise it for, right? Talk about, oh, you have $100,000 in equity. That's a lot, right? Now, how much can you afford to lose if you pass away, ma'am? Like, look at her and directly ask her, how much of that do you want to lose? No, I want to keep all of it, right? So then you kind of transition. Well, if you only had 90 days, in this market, you could probably sell, but it would be pretty tight, especially with how closing works and how long that takes. You have 90 days to figure that out. So wouldn't it be easier if you had some more time, right? I'm just leading them gently down a path. And then I go into what we can do for them. So there's three ways that we help protect our clients. The first way is accidental. Why accidental? Well, do you know how you're going to, go home and meet the Lord? Do you know how you're going to pass away? No, right? It could be that teenage texter that comes out of nowhere and T-bones you, right? You could slip and fall or do anything. It's going to cover all of that. You go skydiving one last time and your parachute doesn't work. You jump, or you fall off a cliff, you drown, anything like that. You slip and hit your head, you fall off the ladder. That's going to cover at least half of it. And what's great about it is that it's going to cover your entire mortgage for very little premium. Now, the second way is we help with mortgage payment protection. That gives your spouse enough time to decide what she wants to do with the house, right? If she wants to sell it, if she wants to take that money and refinance it, if possible, to make her standard of living a little bit better. But Mary, what would you do with the house if you passed away? Well, I'd probably sell it and move in with my daughters. Great. So why would we cover the entire thing?
Thanks.
Josh had a great story about one of his agent's friends. His dad got cancer. He had 9 months before he was gone, 9 months, but he left the house to him and his two brothers. Okay. Now they didn't have the time or the money to go out this house in a different state and take care of everything. So after 90 days came, the bank swooped in, took everything in the house and auctioned it off and sold it, short sailed. Believe it or not, guys, the bank does not care about profit on foreclosures. They just want to get their money out as fast as possible. So the faster they can do it means the better deal someone's going to get, right? So they sold that house for what the loan was, and it was $100,000 or something. I don't know, make up a number, but it was $100,000 and it was worth like 300. So they lost 200,000. And this is the story I'm telling the clients. I said, don't you think if they had just a year of mortgage payments, that would have given them enough money to fly out there, handle his estate, make sure they could sell it and collect all that equity? There's his life insurance that he left behind, right? There's his legacy, but it was all gone in the blink of an eye, right? What that story does is it sets them up to understand, right? And when I do that, I say that makes sense, right? Yes, exactly. And then I move on to the third one. The third way we can protect our clients is through regular term insurance, which is the hardest and most expensive to get. Why do I do that? I'm telling them that it is the hardest and most expensive to get. I'm getting that out of the way. But then I say this, but you know that, right? I'm assuming they already know that, right? And by assuming that they know that, we're on the same page, and they get on the same page really quick, right? Because they already figured if they're old, they know that pretty much. They've been around the block, right? So even if you're healthy enough and we could get you this, it's expensive enough where it'd be almost as much as your mortgage to pay for that. Now that doesn't make any sense, does it? To pay as much as your mortgage to protect it? Right. So I'm going to show you the two most effective ways to help you. And that's through accidental and mortgage payment protection. So that is the proper way to set it up. And now you're going to go and knock it down. So you go through your presentation. You start talking to them about how much time do you think each other needs to make those decisions, right? There's some objections that are going to come your way. Well, I have a 401k. Maybe they didn't bring it up when you asked them, right? Or I'm going to get his benefits when he passes away, or I'm going to get her Social Security when she passes away. Great. Always agree with your clients. Always be agreeable, but you need to be real with them. That's awesome. Your 401k is great that you have that extra money. Well, she could pay for the house for so-and-so until she sold it. Great. But what happens if you had cancer? She's not going to spend every dime to try to save you, right? That's going to dwindle that money really fast. What happens if you live with cancer for 4 years, right? We've all seen it, and they've seen people do that too, guys. They've seen people affected by cancer, and the older you get, the more friends you lose. So they know better than anybody what it can happen, right? So then you say, what about nursing home spend down? What is that? Well, it's what happens when, let's say he got dementia, unfortunately, in another 5 years, and he had to go into a nursing home. You could either A, keep him home and take care of him yourself, which I don't know if that's something that you'd be willing to do. No, I couldn't do it. I couldn't physically do it, Lake. I understand. But now you put him into a facility, that's going to cost $3,000 to $5,000 a month in order to help you to do that. Now, all that 401k that you're using, that's getting spent down and spent down and spent down for you to stay in the house and do all that. This is a surefire, guaranteed way for you to make sure you collect the equity. Because if you are rattled by the emotional impact of your spouse's death, guess what's going to happen? How fast are you going to try to sell the house? As fast as possible. And guess what? You're going to do it desperately, and you're going to take whatever deal comes in. Wouldn't you rather to hold off for another $50,000 in equity if someone came in to buy it? Wouldn't you rather know you had an extra couple of months to make it there? Right, exactly. So that is building MPP in a nutshell and knocking it down and closing it up tight. If you do what I say in the beginning, you're not gonna run into those objections as much because you're trying to get them out of the way, right? You're trying to figure out exactly what they have and either supplement it or give it a position, right? You have a 401k, that's for her income, right? Social Security benefits, right? Oh, I'm going to get his benefits. Yes, you are going to get his benefits, but listen up. You're not going to keep yours too. You're only going to get his. Now you have to live on, no matter what, you're living off one income, right? Can you afford a $1,200 mortgage on an $1,800 Social Security? I'm sure you could, but how tight is that going to be? How much you, and I look at the husband, you don't want her to live so tight at the end of her life, do you? No, I don't. Exactly. That's why we're going to give her enough time to make sure she can make those decisions properly and have the best shot. I think the funniest objection I ever had, and I've get it a couple times, oh, I have a bunch of jewelry, or I have farm equipment that they can sell. I have another property that they can sell. Well, I agree with them, and I say, yeah, you could, but how much time is that going to take?
Right.
Now, is your spouse an expert on, World War II era pistols and guns? Are they an expert on that? Well, no, that's my hobby. Well, I know, but how are they going to know they're not getting ripped off and getting their maximum value, especially if they're trying to sell desperately? How much time do you want her to spend on selling these things? Because I know that they don't sell that fast. You probably could have some guy come in and take them all at once, but she's going to take a heavy hit on what that's going to be. Well, I have $100,000 in guns. That's amazing. Can you show me a couple? But how long is it going to take her to sell those, right? Farm equipment, right? What if the farm equipment isn't up to par for some people's standards? How long is it going to take them to sell it? You see, I'm building that time frame, right? And I'm showing them that this is a guaranteed tax-free way to protect their spouse, okay? And usually, guys, people are going to choose between 6 months, 12 months, or 18 months. That's really what they're gonna select, right? Most people aren't going to go 2-3 years unless they really want to give their spouse a luxury of having that much time. So that's pretty much it for mortgage payment protection as a whole. Now, Jared, I'm gonna pick on you for a minute since you're here. Do you have anything you could add to that?
That is killer. Everything that you're saying is spot on. One thing that I always do when it's coming to mortgage payment protection is I always tell stories. Stories sell. So you want to go through those stories because you can say all those things like what you were talking about, but once they hear something that they can relate to, then that, and get good at telling stories.
Mhm.
And get good at explaining what I always call it, like, is buying time
Mhm.
and protecting the equity in the home. And so I always say, hey, your mortgage is right here and your property value's up here with that 200,000 there in the middle. Well, your mortgage is always going down. And if property does what it tends to do over time, it tends to go up. So your equity is actually growing in two separate directions at the same time. So today you're protecting 100 grand, but 5-10 years down the road, you're going to be protecting 150. That's 10, 20 years down the road, you're going to be protected 175. That is something that needs to be protected. That is a ton of equity and you don't want it going back to the bank. So I always explain it a little bit like that, like,
I love it. That's huge. That's huge. That's a great way to use it. I'm going to start using that in my analogies when you talk to people. And you're right, Jared. Stories are so important all around, but especially in MPP, right? I was telling the story about the gentleman, one of Josh's friend's dads that passed away from cancer, that story I said. And the clients looked at me and they looked at each other and they said, yeah, the lady next door was 85 years old when her husband died and she had to sell everything so fast that she didn't get a nickel of the equity, and we don't want that to happen to us, right? That is creating that connection with someone they know happened to, right?
absolutely.
So yeah, absolutely. Make sure you're telling stories. Get good at telling stories. Exactly. Now, I want to ask from one professional to another, how many MPPs appointments do you tend to close? Say if you had 10 MPPs straight in a row.
For me, I would say probably 60 to 70% of all my sales are MPP sales. And out of those, I will close 80%,
Yeah.
you know,
Yeah.
of every time I present it, I always close it because it makes sense to them. And the way that I set it up, after I show them, hey, I'm actually going to show you our most popular plan, kind of doing what you're doing. You know, it's the best thing for you. It's what everybody's doing. Everybody wants to do what everybody else does, right? And I almost sell against term exactly how you do. I was like, and I say, the dirty little secret about term. Do you want to know a dirty little secret? Over 98% of it never goes collected because people outlive the term. And you have a 30-year mortgage, and the most you're going to be able to qualify for, and it's the hardest one to qualify for, is 15 years. Well, you're 65 now, 15 years down the road, you're going to be 80. You still have 15 years left on your mortgage. Try qualifying for more coverage when you're 80. And this is going to last as long as you do. And what it's meant to do, Susan, it's meant to buy you some time to figure out what you want to do. Number one, do you even want to stay in this big old house dealing with the gutters and the roof and the plumbing and the lawn? Or is it just going to be too much for you to handle? And if you do want to stay, the next question you got to ask yourself is, financially, can I afford to stay? And if you don't want to, or financially can't afford to, we're going to buy you time so that you can get this home put on the market and get top dollar for it and not take a fire sale, so you can take that equity on to whatever's next for you.
Absolutely. That's some fire stuff right there, guys. I hope you're taking notes. Jared is a legend on MPP for sure. And, you know, my numbers have grown to be about 70% of my MPPs, right? Not quite at 80 yet, but I'm still working. Guys, I'm 2 years into this, right? So, but in the beginning, I guarantee you I was closing 40 to 50%, right? It's a hard thing to get confident about, because we start to have the mindset that I'm offering someone at 70 years old $12,000 for $150 a month. I wouldn't do that. I wouldn't do that. If you don't believe in the product, you're never going to sell it. You're never going to sell it until you realize the impact it can have on someone and what it can do for them. You're never going to sell it. So change your mindset. Don't think with your wallet. It's their decision to make. I can't tell you how many times I've done a financial analysis. People are working hard at their age, at late 60s. They have $500 left over a month and they spend $350 of it on mortgage payment protection, because it's that important to them. And you will find those people. I walked into a house one time where they had 5 whole life policies apiece, and they were so confused on what these agents did to them. They just kept giving them $40,000 in 12 here, 5 there, and it added up to $40,000 a piece. I was able to go in there and put it all in one policy for them, save them $100, but it was still $500 a month. Their combined income was $3,500. If I was thinking with my wallet, I would have never sold that policy. I would have never helped them, but I got them double the coverage for less money a month. And guess what? They are super happy about that. That was one of my biggest sales ever at like 6,200. Right? So what you say, what you do matters. Make sure you're framing it in that correct world. Okay. Jared, your hand went up.
Yeah, man. I wanted to tell you that whenever I find policies that people got for burial that they just recently got, I always review those with them. And then I tack the benefit on to the MPP. And what I always tell people is, as the death benefit goes up, the cost per thousand goes down. So it's a lot better to put all of it together under one umbrella than it is to have a bunch of smaller stuff like what you were saying. And so that is a big deal, because you do end up getting those larger sales. You replace those crappy graded policies with something that has an immediate benefit.
Exactly. And you're going to run into people with graded policies who don't need graded policies. Sometimes you run into people who have Great Western or Gerber just because they ran into a Gerber rep. You need to remember that. and they got a graded policy because sometimes that final expense is all they qualify for. And their whole life in Gerber is really, really hard to qualify for, unlike some of our other carriers. So you can come in there and step on over it and show them how to save money and get the coverage they are looking for. But that's a good question. Some of my agents have been asking me, Jared, how do you get a policy review from the phone? Some people are having trouble where they don't want to give the information. How do you frame it in order to really set it up for them to want to look?
Great question. So the way that I frame it is I know my products and I know what's out there. So I start asking questions. The first question I always ask is, how long have you had it? If I hear that they've had it within 4 to 5 years, I'm immediately thinking I can probably help them with this. Okay. If they've had it for 20 years, we're probably not going to be able to help them. But if they've gotten it recently, we can. So then the next thing I ask them is, so ballpark, how much are you paying for that? Okay. And then I always ask them, so did you actually meet with an agent on this, or is this something that you sent in through the mail? Anything they sent in through the mail, that's graded.
Mm-hmm.
Mutual of Omaha, Colonial Penn, all that stuff. AIL, like AIL has a 4-year graded whole life policy.
Wow. Wow, that's crazy.
So you learn these things over time. So you ask some questions. You want to know who they're paying, how much they're paying, and how long they've had it. And when you start to get some of that information, you'll figure out real quick what kind of policy they have. And you can take that information to your upline. I always have my upline chat open when I'm in a meeting, and I'm typing all this into my upline chat. Hey, she has this, she has this. If I can get her to find the policy and take a couple pictures of the first front pages, that's what I really need. But that is going to help you get some good information.
Right. It's called copy genius, guys. You have a team of experts, you know, in your uplines, right? In your growing uplines. That's why your upline chats are so important. You have multiple people to go to confer while you're in this appointment, right? That's why it's so important to keep and pay attention to your workplace, to make sure you have it on you, to call us before your appointment, during and after an appointment. A lot of you don't know, because you're doing virtual, that's exactly what you should be doing. When I was out in the field, selling in the field, going door to door, you know, meeting with people in their homes, I was calling before, during, and after, and I still do it with my virtuals. Not as often, but I still do when I need to, right? Get in the habit of doing that, right? It's going to help you, you know, get the proper language you need to talk to these clients, right? If you're having trouble with an objection, it's going to help pump you up. So we're at 8:32. That was a pretty awesome session for mortgage payment protection. I'm going to open it up for about 10 minutes or so tonight for some questions. So if you got questions, use the little hand signal and I'll call you out.
You told me to remind you, like, about that question in the chat.
Yes, there we go, JP. What's up, man?
I had to pick up my daughter from somewhere, so I don't remember the question. I don't want to look at it while I'm sitting at this.
Okay, I got it here. I got it here. Do we have a compiled list of health conditions that guides us? So we do.
So you like rattled them out real quickly, and that was really powerful. I was like, you know.
Yeah. So don't be mistaken. I spend a lot of time on outside of income producing hours reading, you know, things about the insurance guides. Once I got a hold of the underwriting guides for carriers, like you can get them from CFG, you can get them for Foresters, you can get them for, you can't get them for Mutual of Omaha. Some other carriers don't offer them. Transamerica, definitely. You start to see a pattern. Right. And so I just kind of go, and it's, guys, it's so boring, but it's so helpful. It's so helpful. The other thing I do is I read illustrations. So I'll create an illustration on a test person. And then when you create an illustration, what it's going to do is can compile what the client would actually get in the mail. And you'll be able to read all the fine print. You'll discover things. That's how I discovered that Mutual of Omaha's term policy will actually give you a waiver of premium if your house sustains more than $25,000 worth of damage, if it's damage in a natural cause like flood, you know, a tree falling on your house, lightning, tornado. They'll waive your premium for 1 year while you're getting back on your feet. for your life insurance, right? Pretty cool stuff. So there are underwriting guides that you can get from your upline. If you need help with those, reach out to him or reach out to me, whatever's good.
Yeah.
But general rule of thumb, most carriers are going to be 2 to 4 years on cancer, depending on who it is. Most are going to be within 2 to 3 years to get preferred on, anything heart related, and once you start to see that in the underwriting guide, you'll start to get an idea on who to go to where. Like Foresters. Foresters will have more leniency on insulin than Transamerica does. Transamerica only does standard for people who are on insulin. Foresters does not care about it. But if you have someone on insulin and gabapentin, I know that'll completely knock them out of Foresters due to neuropathy, but I know Trans doesn't give a crap about neuropathy. So you just start learning that from reading those underwriting guides. I know it's boring, but if you want to be the best at this, go ahead and read your underwriting guides and just have those conversations with your upline. I bugged Nelson like every day on this stuff. I was going pretty heavy and hard in paint for sure.
So I've definitely bugged Jared
question.
a lot, and I appreciate your answer. And I'm really starting to get a handle on it. The only thing is you rattled them off in a way, and I was like, there must be another list I haven't seen. A lot of it resonated. Last quick question. I'll just get off this. This is recorded. I want to be able to write some of those tracks, some of those things. I hear Jared's a lot, and what he just said, he tells me like 3 times a week when we talk. I love some of the things you said, and I want to integrate that in. So are we gonna have access to this?
Yeah, absolutely.
Perfect. Thank you.
Yeah, I'll make sure to send you a copy.
Thank you very much.
You got it. All right, Jared, I saw your hand up.
Hey, Lake, on that note, with figuring out the underwriting guide, when it comes to final expense, now we can use other products other than final expense to do MPP.
Yes.
But when it comes to MPP specifically, the application is the underwriting guide.
Yes.
So I will pull the application up in a PDF and I will do a PDF search for stroke, TIA, whatever it is, and see what the look back period is on that, and then like you were saying, like you will find over time as you learn, hey, I can put AFib preferred with Foresters or CVS Aetna, but I can't do that with Transamerica. You learn that stuff over time, but the underwriting guide for a lot of that final expense, there's some small minor details, drug lists, things of that nature, but in general, it's that application. Back to you.
Yeah, I see a question from a Michael Olin. Can I get a copy of those underwriting guides? Yeah, man, reach out to your growing upline. I'm sure they'll be happy to help. Some of them are going to be directly in your applications, specifically Foresters. They'll have it on their application. If you just go to the resources in the More tab, you can see all of the underwriting guides. I'm not going to lie, Foresters is the best at providing underwriting guides. There are other carriers that don't quite do it as much. I'm not sure why, but we're just going to use the people who are easiest, right? Because they're usually the easiest to deal with in underwriting. Any other questions? We've got 4 more minutes of questions. You guys get 2 times a week to ask questions. It's on Wednesday winners and 20K calls.
Like,
yeah,
it's Jared. The one thing that I want people to understand about MPP, and you guys should be asking a ton of questions because this is a concept sale, but I assign a purpose to the death benefit. This death benefit is going to give you 12 months worth of mortgage payments. This death benefit is going to give you 18 months worth of mortgage payments. So assigning a purpose to the death benefit is very good because you see it, like you said, you're seeing that small death benefit. That's not big and sexy. People don't think that, but you assign a purpose to that and then they're thinking in that direction. But
yeah, absolutely. And one more thing on top of that is make sure you explain that no matter when you die, they're getting, sometimes I have older folks that get really confused that I'm only going to pay for this for 1 year, right? Because they think that's the premium wise. So you're going to make sure no matter when you pass away, whether it's now or 20 years from now, she's going to get 1 year of mortgage payments. Okay. Come on, guys. I know we got some newbies on here. Let's get some questions or I'm going to start calling people out. You don't want me to call you out. All right, we're ready. I'm going to close my eyes and randomly pick someone. India favorite. You're the unlucky one. Got a question?
Hey, Lake, I actually don't have a question at the moment, but if somebody else has a question, I'll think of one.
All right. See if anybody else I can pick on. All right. Well, we've got 1 more minute. Guys, seriously, ask some questions. There's no dumb questions here. There's no
Can I
dumb
ask another
questions.
one?
Oh, we got someone. Let's go, Melissa Field.
Sorry, I put the clap icon instead of the raise my
That's all
hand
right.
icon. Sorry. So actually, it just kind of is a question that came up the other day for me. So for people that, you know, what I have run into is people, oh, well, I have a 401k, so that's going to pay for my final expenses or my mortgage, or, you know, when you're talking, and I know this is mortgage payment protection, but like, you know, I have a mortuary trust, so I don't need those kinds of things. So those are kind of things that I run into, which I know isn't exactly mortgage payment protection, but kind of coincides. I'm not sure if that's.
Well, sometimes it does happen with mortgage payment protection. Yeah, they'll say they have enough in the bank to take care of it, or they'll have a 401k to take care of it. That's why we get it out in the beginning. That's why I always ask them, what do you have that acts like life insurance, right? And then if we get to that point, Melissa, I'm going to ask them, why did they fill out the form, right? Why did they need me, right? Because something is better than nothing. Right.
Yep.
And so we have to go back and re-explain the why and re-explain how much time it would give them. Talk about nursing home spend down, talk about getting cancer, right? Cancer resonates with a lot of people. You might be surprised. It really does. They either know somebody or have figured it out, right? And especially with a 401k, what happens if we get into World War III, guys? Right?
Yeah.
What happens if the economy absolutely tanks like in 2008? Right when you need that money, you lose 50% of it. Now that's not going to last you as long as you can, because guess what? You've got to wait for that to grow, and you're taking it out, and you're not putting in anymore. You can't contribute anymore. So that money is just going to dwindle faster and faster, right? So this is a guaranteed tax-free benefit to make sure your wife has that time. And that's something you want to give her, right? Is that time. You see, those, start adding in those statements. That is something you want to do, right? Start adding them in there, because that's going to make more sense to them. We can lead a horse to water, right? We can't make them drink. Some people aren't your clients, right? But if you lead them and that you make that water look really tasty, they're going to drink from it by using those statements, because it does make sense to them. Sometimes they're just ornery and they want to get off the phone. Right. But
Another thing, sorry, another thing that I kind of run into too is that oftentimes, of course, with age, you know, the payments, the monthly payments are, well, I'm going to pay $100 for $10,000 worth of coverage. Like, that's like, I can set that aside and save that money. I don't even have to do this. Why am I even doing this?
yeah,
That's
I
another
love
thing.
that objection. I love that. Great. That's awesome that you can set that amount of money aside. How much have you saved in the last 10 years? Not much. Okay, are you going to be committed enough to save for another 10 years? Well, yeah, I would be. Okay, well, what happens if you die tomorrow? Your wife's going to have $100. How's that going to help her make the mortgage payment? You got to be real and upfront with them, and don't laugh at those moments, because it can be funny sometimes, but get dead serious, right? You've laughed with them. You should be laughing with them throughout the presentation in the beginning. Laughter is a great way to bring brevity and rapport, but get serious in the right moments and they'll take you seriously, right? You know, I had someone told me after I did that to them, I said, you're good at this. I said, I'm not good, I care. And they bought their insurance, right? So as long as you can be bold like that and make those bold statements, you can poke a hole in their logic without popping their ego. That's the important part. You need to poke a hole in their logic, but not pop their ego. That's why you say, that makes sense to you, right? You and I both know that, right? That's why using those close-ended statements are really going to help you. Does that make sense?
Yes, thank you.
Awesome. Mark Spear,
Blake, how are you?
I'm doing excellent.
So most of the time when you're doing mortgage payment protection, or when anybody fills out the form, they're looking to subsidize something that they may already have. They have life insurance, or they like Melissa said, they have 401ks, or they have IRAs or annuities, or whatever the case may be. How do you give me some ways, or give me as well as the new people some ways that you would assign a role to those in particular products that they already have in place?
Okay. With a 401k, that's your wife's income for the rest of her life, right, sir? So you want her to live the best life possible in her end of years, right? You want her to have as much as possible, right? You and I both know that because I can tell you love each other. So you want her to have as much as possible, right? Why should she be spending that on the mortgage if she's going to sell it anyways? Don't you want her to have her more later? Boom, 401k set aside, taken care of, right? I've already got life insurance, right? That's awesome. I'm glad you have life insurance. Then you start to take a look at it, and then you start looking at it like Jared said, right? Checking to make sure they actually have what they have. Because, and the fact of the matter is, Mark, if they have something great, which is rare, but if they have something great, we're not even going to touch it. And again, I've spent 15 minutes on that appointment, and I say, see you later. But that's happened to me 3 times in 2 years, 3 times. That's happened to me. So by talking about their other life insurance, okay, well, what was the purpose of that? What were you thinking about when you got that insurance? Well, I was thinking about my business. Okay. Do you need that much insurance anymore? Right? I was thinking about paying off the cars, paying off this, paying off that. Right. So now that's taken care of because you're paying off that. Okay. These people still think they can sell the house in a short period of time. That's why they're thinking I can just spend the 401k money or the life insurance money to do this. Especially when someone has a burial policy, like you want to bury them, but you want to steal that money from their burial. That's not how I talk to the client, but that's all they have in place. And that one's a generally easy one. So you have a $10,000 policy, or you have a policy through a credit union, right? Great. That's for your burial, right? See, I'm just getting them to agree with me to put them in their place. And I'm bridging right into the 3 ways that we can protect you. Accidental, mortgage payment protection, and term. Okay. Does that make sense? Jared, if you have anything to add on that, it would be great.
Yeah, the one thing that I wanted to tack on to that, like, is when people have a current term policy and they think that they're okay and don't need mortgage payment protection when they have a term policy. So I always explain to them and start asking more questions. Well, how long have you had that? Oh, I've had about 10 years. Okay, great. And how long does that last? Oh, it was a 20-year term. Okay, well, you have a 30-year mortgage. So if something happens in the next 10 years, that's absolutely going to pay out. But let's bridge the gap, because 10 years down the road, something might have happened medically where you couldn't even qualify for this. And then I tell stories about how I was showing somebody a mortgage payment protection and they had to think about it. This literally happened to me. Like, I pushed and I pushed and I pushed, and they said they had to think about it. I was like, okay, that's fine. They called me back less than a month later. The guy's PSA levels had spiked through the roof on his prostate, and he had to go into prostate cancer treatment. Well, I could no longer get him that policy anymore. I ended up getting him into Great Western, but I could no longer get him the policy he wanted because he waited. If we would have had it put in place, the cancer diagnosis was not there. There was no sign of cancer that was there. He would have been able to keep that other policy that had an immediate death benefit. So you tell stories about how larger insurance policies are going to go away before your mortgage does. We want to get this put in place while you're healthy.
Mm-hmm. Don't let them be so arrogant that nothing can touch them.
Don't let them sell you on an excuse.
Correct. There we go. This is your sales process, guys. You are in control. You know what's best for them, and you just have to teach them that. To break it down into more of a skeletal view, if you get an objection like that, you agree with them, then you bridge and handle the objection, and then you tell a story, right? Those 3 steps are going to help you overcome those objections. Okay, so agree with them, bridge to handling the objection, and then tell a story. Okay, the stories are so important. I don't know if you got that tonight, but stories are so important. Why do we talk about it all the time on every call, right? Some of us say we don't have a story, right? If you're lucky enough not to lose anybody, or tell a story about someone of a friend, because we all know people. I mean, there's GoFundMe's online all day long, every day, right? And I'll tell my clients that you don't want your wife to have to rely on GoFundMe, right? Literally the other day I did that with a client. She said, no, because I had to do it for my father who had cancer. And you know how hard it was to get the money out of that, and how much they took of that money that was supposed to go to us, right? They take 25% right off the top. So Chris Sorley, and then we got Jackie Russell right after. Those would be the last 2 questions of the night, guys.
Hey, Lake. Hey,
Chris.
So going back to Jared's point, when looking at how long they've been paying on a policy, and maybe it's been 5 or 6 years, is there a point where, it's objection after objection where you leverage maybe accumulated cash value into their policy to get them into a new one?
I mean, you don't want to coerce them to switch just based on cash value. That's not really, that's illegal. I'm pretty sure that's illegal. Yeah, it's called coercion. But I think what you mean is like, what cash value they certainly have. You have to make sure that you're doing the right thing in the client's favor. So if it's just on cash value, that's nothing you can build a home on. You've got to make sure that the cost of insurance are going to be similar or less, right, in order to do this. So if they've had a whole life policy for 10 years, forget about it. You're never going to beat it, right? They did the right thing. If they have a term policy, then yes, there are reasons to replace that with a whole life policy where it's appropriate. And cash value can be attractive at that whole life. Okay, so that's why I wouldn't recommend replacing the term sometimes unless it's going to be a year up or so. But if they've had a term for 10 years and they have 10 more years left on it, keep it. You got 10 years with that. Why not? It's stupid cheap right now because you did the right thing back then. But now we have to worry about the 10 years after that. So then we supplement with this policy. Does that make sense, Chris?
Yeah, no, absolutely, man. Thank you.
You got it. Jackie Russell, you're up. Oh, you're on mute, Jackie.
That's funny. You tell me I'm on mute and I say, hold on, like you can hear me. So, so I'm curious if there are any stories that you would recommend somebody just starting out might want to avoid.
Yeah. For that one could take a while. We could do a story time for Wednesday winners. That would be kind of a neat thing to do. But yes, talk to your upline about stories to use for a new agent. We do have the Bill South story, which is a popular one. So remind your upline of that. We do have Josh Harris's story, which is on the mortgage payment protection call he did a couple years ago with Nick Horner. And then there's personal experience stories that they have that they use. Just make sure it's your growing upline.
Thanks.
Yeah, you got it. All right, guys, that wraps up Wednesday winners. We went a little long tonight, but this was fun. We had a lot of good nuggets come out. I'm glad to have you on here. We'll see you next Wednesday at 8 p.m., the last Wednesday of the month. Remember, we all are going to be hustling the last Wednesday of the month, so we will not have Wednesday winners, but we'll be on next week, okay? So appreciate you guys. Glad to see a bunch of hungry people learning to be the best agent they can be. You're lucky you're here with TLG and you have the support system, and I couldn't be happier to be a part of this family. So good night, guys.
Thanks for the info.
Like,
Good night.
Thank you. Good night.
Night.
Good night. Bye.